Let's see if we can figure it out. What's up, everybody? I am going to analyze SPY. We were in the room this morning, and SPY was a big winner for us. And so, SPX puts paid really, really well. Now our SPY puts are paying really, really well, but I want to talk about what we saw. Okay. Give me 1 minute. Okay, here we go. Now we got some people. All right, so here's my screen, right? You guys can clearly see my screen. This is SPY. This is a 10-minute chart, but specifically I want to look at the 4-hour chart. I'm using the Ripster EMA clouds. You can see my EMA lines right here on the right. You can obviously see the line or the clouds right here. What we're going to do is we're going to switch to the 4-hour because the setup is on the 4-hour. And I talked about this in chat. Here's where we're at right now. We're actually right here. You can see falling apart. Everything's falling apart to the downside, falling apart to the downside. However, what I pointed out in the room was because we had this kind of the last 6 weeks, this push up. This is a 4-hour. We had this push up, and the push up just kept going and going and going, and people saying we're getting extended, we're getting extended, we're getting extended. Well, we were. However, even more than that, what was happening was the EMAs were widening apart. So basically, on our 4-hour setup, what we had is we had all of our 10-minute, 30-minute, 1-hour, and 4-hour support was up here. You can actually see on the 4-hour clouds, the 4-hour break was like right here. So it was literally like right here. And what ends up happening with that is you get something called an MTF air gap, multi-time frame air gap. Give me a second. I'm talking to you guys and I'm managing positions at the same time. So I just need to get, okay. All right. So anyway, the MTF air gap, this was a beautiful setup. I even posted about it on Twitter so that I could kind of give you guys a little bit of heads up of what I was looking at. But basically, an air gap is the space that's between two clouds. So this is the 512 up here. This is the 3450 right here. Okay. This space right here is called the air gap. And this gap happens to be $7. We can calculate it. It's actually it's like 6 something, but let's just put $6. So right here it's 621, and down here where our next support level is, this is our next support level right here. Let me get rid of this. Yeah, you could see it right here. This is the 34 EMA, the 4-hour at 6:15:48. This is where SPY is going. SPY is going right here. The reason is that there's no other support. There's no other, all the support is up here, which you've already broken through. This is the next support level. And if that one doesn't hold, then we're going down here. So this is like the idea of this right here is like bungee jumping. So this is the bridge. This is the bridge up here. You jump off the bridge, and then this is the part where the bungee lets you out. And then this is the part before you go smack and hit the water or whatever. What's going to happen is we're going to touch this 4-hour support, whether it be tomorrow or today. It could be today. most likely it's tomorrow. Most likely it's going to happen overnight to really piss me off. But what you're going to get is you're going to get this. And then these EMAs will start to come down. So, as we start selling off, these EMAs will turn, they'll come down this way. And what you're going to see is you're going to see a bounce. So down here, you're going to get a bounce when this happens. And the bounce might look something like this. Work with me here, Call. Okay. This is called the law of oscillations. It's like a bouncy ball. When you bounce a bouncy ball, the first bounce is always, the highest. So you get like it goes boing, 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 and then if it continues to bear flag, it'll continue to break down to here. So anyway, that's what's going to happen there. Most likely, it's going to happen overnight. I am in puts. I took puts on this break, which I put it in the room. If you guys were paying attention in the room, I took puts on this break of the cloud right here. All right. So I am in puts. I'm in the, well, we had SPX puts earlier, the 6200s. We paid $1.80. They went all the way to $8. We took off half, and then I got stopped out at the entries. Right now they're at 420. You still have those. You're up 200% or whatever. But I took actual SPY puts, and the ones I took were the 615s, the July 11th 615s. Now, why did I take July 11th 615s? Why would I take that particular one? Well, because it just so happens it's where my I'm going to get rid of these so we clean up the chart a little bit. It just so happens to be where my EMA is 615.58. So if I get a 615 put and this continues to come down tomorrow or this afternoon, it's going to push my 615 puts, up in value. So this setup, we were looking at this setup. I say we, Owen and I, Little Tape, give him a follow, by the way. We were looking at this setup last week and we were salivating. We were like, yeah, we gotta really pay attention to that, because when that breaks, that's going to be a juicy winner for us. And so that's what happened today. It just, for a move like this, you need something to instigate it, right? You need a catalyst. And the catalyst today was the tariff letters. So we were able to capitalize on this trade. If we look at it on the 10-minute, we can clearly see we capitalized on this trade really, really well, because when the letters came out, it was here, right? So we got that trade. We went down here. We kind of bounced. We rejected the 512. I did stop out on this candle. Re-entered on, I believe I re-entered here. Got stopped out here. Oh, I took the puts. We took the puts up here on SPY. I'm talking about the SPX trades right now. We rode this one down. We got $8 out of a $1.80 entry here at the high. And now you see we're breaking further down. This is a beautiful little bearish trend the whole way down on the 10-minute. But for what we're looking at here, we're just interested in looking at this 4-hour, because the 4-hour is going to tell the bigger story. Now, remember, when it comes to clouds, your 4-hour and your 1-hour are your higher time frames. So you're going to have better support. So like when the stock comes down and hits that support line, you're going to have better support than, say, a 10-minute support or a 30-minute support. Whereas the resistance, if you're going up, you're going to have a higher resistance, a higher chance of not being able to get through that resistance. So typically when we have a situation like where we have the 4-hour down here, usually what you get is you get this coming down and then a very hard bounce. Just think of it as like a very springy trampoline. It's like boom, 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 boom. We really could, if we continue to break down, if we touch this, like I think we will this week, we could certainly test this. This is the bottom of the 3450. This is the 34. This is the 50 EMA. It's 612.18. If it doesn't hold here, here's the daily down here at 607. I don't think we're going to get there, but I certainly think that we can absolutely get to 615.50, and chances are we can test 612.18. So knowing that, you would say, Tim, what would take you out of that trade? What would possibly take you out of this trade? The only thing that would take me out of this trade is a 10-minute cloud confirmation that we went bullish. So we have to look at the 10-minute. Now, what does that mean? Okay, so right now you can see this is the 512, this is the 3450. All of our EMAs are up here. They're up here, we're down here, which means we're bearish. You can clearly see that we're bearish right here. The only thing that would take me out of this trade is a curl that went like this and came above the 512 moving average. And this flipped to bullish. We would execute out of that trade on the 10-minute, okay? But that's not the case. We are getting, as you can see here, we're getting bear flagging, and we're just weak. We're very weak right now in the market. So I telegraphed this trade in Tenet this morning. You could have cleaned up on this trade. This is an A+, 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 A+ setup. I waited. I knew this trade last week. I had this trade planned out. Owen and I had this trade planned out. I had it up. I knew exactly what I was going to go for. As soon as the catalyst hit, I executed, and now I'm getting paid. This is what it looks like. I'm not trading everything under the sun. I'm not trading the shiniest toy in the market right now, whatever that is. I'm trading my bread and butter. It's not hard. You only need to have 3, 4, 5 things that you're really good at in the market to make money repeatedly. And as you all know, I trade SPX a lot. And this was a really, really good setup. So now I'm going to watch this 10-minute. I'm going to watch this 10-minute. And if this 10-minute curls above the EMA, I am going to get out of my trade. But if it doesn't and it continues to reject, so it'll do something like this, rejections, rejections. Our target is this 4-hour right here, right here. And if that hits, I'm going to take some of my options off. Excuse me, because remember, this is a 4-hour, so it's a very, very good support level. Just think of it as a thick support level, like a thick foundation. It's going to take a minute to get through that. Unless we have a big catalyst or something, it'll probably, bounce around and kind of doing, bear flag a little bit. But if it does come through here, my next target is going to be right here. So this is SPY, 4-hour, Ripster EMA clouds. And you can see, it's like, let's just go through. 10-minute under the clouds, bearish, okay? 30-minute under the clouds, bearish and bear flagging. 1 hour, bearish, under the clouds, under the clouds here, bearish. 4-hour, bearish in the air gap, in this big air gap. We can even go out to the daily. Look at this right here. I want to show you. This is the bottom of the 512 on the daily. Let's see where this intersects, or there's confluence with another time frame. So I put an arrow there. You can clearly see. Let's go back to 4-hour. Look at that. The daily lands right inside the 3450 EMA. This is a good spot to say, okay, I think we're going to go there because there's confluence there. Confluence is where one time frame meets another time frame. You have 2 time frames intersecting each other. So that's the thesis I'm running with for the rest of the day and tomorrow. So that's how I analyze SPY when it's on the longer time frames. I hope this helps you guys out. Thanks for watching. Appreciate it.